Welcome to DayTradeToWin. We're back with another How to Day Trade Using Price Action episode here. Today we're going to cover market trends, higher highs and higher lows, a little bit more. This is an important topic. Market trends are going to make you money in day trading. You can of course also trade consolidations and trading ranges, but when you think about it, even if the market is in a range on an hourly chart, it is going to be trending on a 1-minute chart, for example. So you will always have trends in the market. How do you know when the market is in a trend? How to know if the market is trending? You need to read the price action. You need to see that there are waves going upwards and waves going downwards. Higher highs and higher lows, lower highs, lower lows. If you watch this Day Trading Using Price Action YouTube series, we have touched upon this in a few videos already, so make sure you subscribe to the channel and go through the playlist that you'll find at the end of this video. So let's take a look at trends, higher highs and higher lows, and see how we can use this knowledge to filter out bad trades. Any new trend will begin when the previous trend ends. Well, duh, that's like saying if you jump into the water, you're going to get wet. But in all its simplicity, that's how it is. And I always recommend you to keep things as simple as possible. But let's take a look at the chart here and analyze the trends. So here at the right hand side we have a trend. The market is trending upwards and we can draw support and resistance lines here, like so. Now, how would you know when this trend started? Well, we just go back and look at the previous trend. We see a few small trends here, short-term trends. I'll draw them here using different colors. When we go back, it's always quite easy to see where each of these trends started and where they ended. But you can also do this in real time going forward. And you see me do that in some of the live day trading videos that I publish. So these trend lines, in combination with the other methods that I teach in this video series, it helps me filter out bad trades, and it tells me when to be cautious and careful with my positions. So the first one here, the current trend, this trend started right here. Before that, the market was trending sideways, it was consolidating, and before that we had an uptrend, and before that uptrend we had a small downtrend. In the downtrends, it makes sense entering short positions, while long positions can be filtered out. We always want to trade with the trend and not against the trend. Here we see that the trend line was broken. That's the exact time when the new trend started. The higher highs and higher lows that we see here confirms this, and the new trend here is established here. As long as this trend is in effect, it makes sense trading long. In other words, filter out short trades and only buy, don't sell short. When this trend ends, when there are no more higher highs and higher lows, we see the market arching over. And when the trend line is broken, a new trend is forming. If it's a downtrend, we enter short positions. If it would be an uptrend, we enter long positions. When a market trends sideways, I usually want to filter out any trades that occur at the top or bottom of the trading range. So this idea of trading with the trend is a good way to filter out bad trades using the price action that you see in your charts. For example, if you use the trade scalper scalping trading strategy or the Atlas line day trading strategy, you simply trade with the trend and filter out trades that go against the trend. That's it for today. Make sure you subscribe to our channel and watch the playlist that is linked right here. Until next time, good trading!